What if your deepest held beliefs could literally cost you your bank account?
Sounds pretty extreme, doesn't it?
It really does. But for a growing number of Americans, losing access to, essential financial services, things like bank accounts, loans, even just processing payments, it isn't just some hypothetical worry anymore.
No, it's becoming a harsh reality for some.
Exactly. This practice, it's often called debanking, and it seems to be increasingly impacting individuals and organizations.
And crucially, not necessarily for financial misconduct, right?
Right. Often it seems tied to their political or religious views. It's a pretty striking development, raising some fundamental questions about financial freedom.
Mm-hmm.
And just recently, on August 7th, 2025, President Donald Trump took quite a significant step. He signed a powerful executive order. It's called Guaranteeing Fair Banking for All Americans.
Yes, aimed squarely at this trend.
Yeah, the order aims to push back against what many see as, well, a direct threat to basic liberties.
Because it's not just about, can you swipe your card at the store?
No, it's deeper. It's about whether Americans can truly participate fully in society, express their beliefs, without this fear of being financially canceled.
That term keeps coming up.
It does. So today, we're taking a deep dive into this whole complex issue of debanking. We've got a stack of sources here that lay out how this practice seems to have evolved, who it's impacting, and, importantly, what steps are being taken to combat what many are calling a fundamental threat to American freedoms.
Yeah, we'll guide you through the key facts, unpack some perhaps surprising details, and explore what it all means for you.
Right.
And we're going to try and clarify what debanking actually means in practice. We'll trace its history a bit, from legitimate anti-money laundering efforts, which are necessary, to what's now being alleged as political targeting.
Right.
And really analyze the implications this has for things like free speech and financial privacy. Our mission today is basically to equip you with the knowledge to understand this critical issue.
Especially how these recent actions are trying to restore some fairness and neutrality in our financial system.
Exactly.
So let's start with the basics then. What exactly is debanking?
Well, simply put, it's when banks or, other financial institutions close accounts or refuse services. It could be to individuals, could be to businesses.
Okay, straightforward enough. But you mentioned it started with anti-money laundering laws.
Yeah, initially the practice or similar practices came out of federal efforts to flag genuinely suspicious transactions, fighting crime.
Which makes sense.
Of course. But the concern now is its alleged use based on, political, religious, or social views rather than actual financial risk.
And that's where the new executive order comes in.
That's right. What's really crucial to understand here is how President Trump's executive order broadens that definition. It specifically targets politicized or unlawful debanking.
Okay, what does that mean specifically?
It defines it as any action by a financial service provider, could be a bank, could be a payment processor, to restrict access to accounts, loans, or other services based on a customer's political or religious beliefs. Or even, and this is important, based on lawful business activities that the provider just happens to disfavor for political reasons.
So it's not just about beliefs, but also legal businesses they don't like.
Exactly. And that goes way beyond traditional financial risk assessment.
This sounds an awful lot like cancel culture, just playing out in the financial world. Is that a connection others are making?
Oh, absolutely. Organizations like the Heritage Foundation are pretty unequivocally calling debanking cancel culture's new weapon.
Strong words.
Very. And Newsweek also described it in similar terms, like cancel culture migrating from college campuses and social media into the banking sector.
So from online arguments to your actual bank account. That's the fear. Many see it as this dangerous partnership almost between government influence and financial companies, where basic services could be cut off for people with differing opinions.
You mentioned earlier this nudging us towards a tech-enabled social credit system. Can you unpack that a little? It sounds ominous.
It does sound ominous, and that's the concern being raised. It's this idea that your access to essential services, maybe even your standing in society, could eventually be tied to some kind of score based on your behavior or beliefs, possibly monitored by the government or powerful corporations.
Wow.
The fear is, if banks can deny you service for political reasons today, does that open the door to a system tomorrow where your financial life depends on whether you toe the line ideologically, not just whether you pay your bills?
That's Yeah, that's a chilling thought. And the core concern here, practically speaking, is that access to these basic financial services, having an account, getting a loan, processing payments, it's just crucial for daily life now, isn't it? It's absolutely fundamental. I mean, we live in a society where using cash is becoming less and less common for many things.
Right.
Without these services, how do you pay your bills? How do you get paid? How do you run a legitimate business? It cuts you off.
Have there been concrete examples of this kind of impact?
Yes, unfortunately. There are harrowing stories. We saw reports, for instance, about a Canadian trucker involved in the Freedom Convoy whose personal and business accounts were shut down,
Completely cutting him off.
completely cutting off his ability to make a living. Imagine waking up to find your payroll frozen, or suddenly facing massive debt because you can't access your own funds to pay suppliers or loans.
It's not just inconvenient, it's potentially ruinous.
Exactly. It's a fundamental blow to someone's ability to even participate in the economy, let alone society. It harms livelihoods, damages reputations, often without any clear way to fight back.
And you mentioned earlier that banks often justify these actions using this vague standard, reputational risk. What is that exactly?
Ah, yes. This reputational risk standard. That's where things get particularly murky, according to critics.
Murky how?
Well, it's subjective. It's not based on clear financial metrics. And the concern is that this vagueness can be exploited, perhaps by regulators, to indirectly pressure banks into targeting industries or individuals that a particular administration might disfavor.
So it's a way to target without leaving clear fingerprints.
That's the argument. Newsweek pointed out it can sometimes amount to little more than the regulator's subjective assessment of the ickiness of a particular individual or industry.
That's not exactly a rigorous standard, is it?
Not at all. And that lack of objective criteria creates enormous room for potential abuse, for political targeting.
It feels very modern, this sort of digital age problem. But you suggested earlier that this idea of pressuring banks for non-financial reasons actually has a history.
It does, yeah. Many observers point to a clear precedent in something called Operation Choke Point.
Okay, tell us about that.
So Operation Choke Point was an initiative under the Obama administration. It was effectively a Department of Justice task force.
What did it do?
It put pressure on banks, significant pressure, according to reports, to deny services to perfectly legal businesses and industries that the administration at the time disfavored.
Like who? What kind of businesses?
We're talking about things like payday lenders, firearms dealers, even tobacco merchants. Legitimate businesses, but they were labeled high risk or posing reputational risk by regulators, even if they were financially sound.
And the banks felt this pressure.
Oh, yes. Bank executives from that era actually reported feeling very, very real pressure. They said a suggestion from a regulator felt like an order.
Wow. So that program was eventually stopped.
Yes, President Trump ended that initiative back in 2017 during his first term.
Okay, so it's stopped then. But now there are accusations, you mentioned, of the Biden administration sort of rebooting this concept. Operation Choke Point 2.0, some are calling it.
That's the accusation, yes. Particularly aimed at crypto firms, apparently.
How so?
Well, regulators under the Biden administration have cited legal uncertainties surrounding cryptocurrency as reasons for banks to be wary, to cut ties. But critics, like those at the Cato Institute, argue that these so-called uncertainties were often created by the federal agency's own hostile or unclear stance toward the industry.
Creating a self-fulfilling prophecy, almost.
Sort of, yeah. Effectively creating a new kind of choke point is the argument.
So if this is happening, who exactly has been targeted by these debanking practices more recently? Our sources had some really compelling examples.
They did, and the list is surprisingly broad, actually. It affects a really diverse range of groups.
Okay.
Well, we've seen religious organizations impacted. JPMorgan Chase, for example, closed the account of Sam Brownback's religious nonprofit, the National Committee for Religious Freedom.
Oh, good.
Bank of America reportedly closed accounts for a nonprofit called Indigenous Advance. They serve orphans and widows overseas, and also for a church that was supporting its work.
So religious nonprofits doing charity work, are there other patterns?
Definitely. Beyond religious groups, we see people described as political dissidents getting caught up in this. MyPillow CEO Mike Lindell, for instance. His accounts were terminated by Minnesota Bank and Trust. The stated reason: reputation risk. But importantly, there was no allegation of financial fraud.
Just reputation risk.
That's that vague term again. And perhaps even more strikingly, there were allegations involving the U.S. Treasury's FinCEN unit That's the Financial Crimes Enforcement Network.
What did they allegedly do?
Well, reports suggest they urged banks to flag individuals based on certain purchases or associations. Things like buying religious texts.
Buying religious books.
Yes, or shopping at outdoor stores like Bass Pro Shops, Cabela's, Dick's Sporting Goods. Or even supporting organizations labeled as hate groups by certain activist lists, flagging these people as potential domestic threats.
Based on shopping habits or supporting certain groups.
That's what was alleged. And the White House's own executive order mentions that the government apparently suggested flagging transactions containing terms like Trump or MAGA.
That's quite startling, flagging specific political terms.
It is. And it hasn't just affected activists or specific businesses. Even high-profile figures claim they've faced it.
Such as?
Well, President Trump himself stated that JPMorgan Chase and Bank of America refused over $1 billion of his deposits. And Melania Trump also reported being debanked, calling it political discrimination.
So right up to the former president and first lady?
Apparently so. And we also saw the case with gun rights groups. The New York Department of Financial Services pressured financial institutions to cut ties with the NRA.
Ah, I remember that case. Didn't that go to the Supreme Court?
It did. And the Supreme Court actually ruled that action unconstitutional in NRA v. Velo back in 2018. So these aren't just isolated incidents you see. They seem to reveal a pattern, according to critics.
That's quite a list. Yeah, it really drives home the scope and the potentially chilling nature of this issue. So let's turn now to how the government is fighting back. President Trump's recent executive order is clearly a major part of that.
It absolutely is. The Guaranteeing Fair Banking for All Americans executive order, signed August 7th, 2025. Its main purpose is pretty straightforward.
Which is?
To ensure that no American is denied financial services based on constitutionally or statutorily protected beliefs, affiliations, or political views. Plain and simple.
Trying to take the politics out of banking decisions.
Exactly. It aims to eliminate this politicized or unlawful debanking by forcing banking decisions back towards being based purely on individualized, objective, and quantifiable financial risk analyses, not on subjective views.
What would you say is the most significant part of this order, the real game changer?
You know, arguably, one of the most impactful provisions is the requirement for federal banking regulators, the agencies overseeing the banks, to actually remove reputation risk or similar vague concepts from their official guidance.
Get rid of that term entirely.
Get rid of it, yes. And they have 180 days to do it.
Yeah.
This is huge because for years, critics argue this subjective concept has been a kind of loophole, a way for regulators maybe to target disfavored entities without needing hard, objective criteria. By mandating its removal, the EEO tries to strip away that arbitrary power.
Forcing decisions back to actual financial risk, not this ickiness factor you mentioned.
Precisely. It's meant to be a fundamental shift back to objective assessment.
What else does the order do?
Well, beyond that key piece, it directs the Small Business Administration, the SBA, to identify and actually reinstate clients who were previously denied services because of politicized debanking. They have 120 days for that.
So trying to undo some past harms.
Seems so. And it explicitly includes payment processing services too, not just bank accounts. The Treasury Secretary is also tasked with developing a big picture strategy to combat debanking overall.
Okay.
And federal banking regulators also have to review cases specifically for unlawful debanking based on religion, and if they find instances, refer them to the Attorney General. So it's quite comprehensive.
And has this executive order received much support?
Oh, widespread support from certain groups, yes. The Alliance Defending Freedom, ADF, publicly thanked Trump for prioritizing it, calling it one of the most pressing issues of our time.
Okay, so groups focused on religious freedom and free speech. What about others?
Even more broadly, perhaps, a coalition of 31 state financial officers, treasurers, auditors, controllers from 23 different states issued a joint statement backing the order.
That's significant across many states.
It is. They called it a critical step toward restoring fairness and neutrality in the financial system, and specifically mentioned stopping the weaponization of reputational risk. That shows pretty strong backing at the state level, across party lines in some cases.
Interesting. Now, it's not just the government acting. You mentioned banks themselves are starting to respond, changing their own internal policies.
Yes, and that's a really crucial development. It suggests the pressure, whether from the EO or public campaigns, is having an effect.
Which banks specifically?
Well, JPMorgan Chase, for example. They'd faced accusations, as we mentioned. They got rid of a vague social risk policy they had. And in 2025, they updated their code of conduct to explicitly state they don't discriminate based on political views or religious beliefs.
So putting it in writing.
Putting it in writing. Bank of America did something similar. In late June 2025, they revised their code of conduct to remove language that allowed account closures based on a customer's religious viewpoint.
And that was seen as a win for activists.
Yes, it was hailed as a victory for conservative activists campaigning against religious debanking. And others, like Citigroup and PNC Bank, have also made public commitments to combat debanking and reassure customers about non-discrimination.
So some movement from major players there. Beyond the executive order and these bank policy shifts, are there efforts in Congress as well, like trying to make this more permanent than an EO?
Yes, definitely. There's a push for legislative solutions which would be more binding than an executive order.
For example,
Senator Kevin Cramer, a Republican from North Dakota, he introduced legislation to basically codify something called a Fair Access to Financial Services rule.
what would that rule do?
It would essentially prohibit banks from these subjective service denials. It would mandate objective, quantifiable, individualized risk assessments, getting rid of that reliance on vague, reputational risk. It signals a broader push to lock these protections into law.
Okay, so we have the executive order, banks changing policies, potential legislation. These all sound like significant steps forward, but are there still challenges or limitations we need to consider? An executive order isn't a law, right?
That's a key point and a valid concern raised by some. Critics, you see them on platforms like Reddit sometimes, note that an executive order primarily binds the federal agencies. It doesn't directly compel private companies by itself.
Although the regulatory pressure might make them comply anyway.
Often, yes. Companies tend to fall in line when their regulators change guidance. But there's also a question about the scope. Will it fully impact non-bank entities? Think about Visa, MasterCard, Stripe, PayPal. They're crucial for payments too.
Right, the payment processors. Are they covered?
The order directs the SBA to address payment processing denials. But how comprehensively it reaches all these private, non-bank players is still maybe a bit of an open question for some.
And what about this other concern, that even with the order's language about apolitical risk-based assessment, could it still be selectively applied somehow?
That's another point of debate you hear. Some sources point to figures involved in shaping these policies, like Russell Vought, who co-authored Project 2025, that big blueprint of conservative policy ideas.
Okay, how does that relate?
Well, the concern raised is whether the focus might be on stopping debanking for certain groups or viewpoints favored by conservatives, while potentially still allowing it for other content or activities deemed unlawful or disfavored by that administration.
So protecting some groups, but maybe not others, depending on who's in charge?
That's the potential worry some commentators have expressed. Could it protect religious groups or conservatives, but maybe not, say, certain types of online content creators if they're deemed problematic by the administration? It highlights the complexity of ensuring truly neutral application.
It really is complex, so let's try and bring this all together. Why should this deeply matter to you, the listener, listening right now? Why should every American care about this?
Well, fundamentally, it matters because debanking, especially when politicized, is seen as a direct, almost tangible threat to your basic rights. Your freedom of speech, your religious freedom, even your ability to just fully participate in a democratic society.
How so?
Because in the modern world, the ability to make and receive payments, to have a bank account, it's fundamental to exercising almost all other rights. How do you donate to a cause you believe in? How do you subscribe to news you want? How do you run a campaign or a small business based on your ideas if you can be cut off from the financial system?
It underpins everything else.
It really does. And this apparent growing partnership, or at least alignment, between government influence and powerful financial companies to potentially deny access based on opinion, that's a serious concern. It affects the very fabric of our freedoms, really, regardless of what your personal beliefs happen to be.
So looking ahead then, what are some proposed long-term solutions? How do we ensure financial liberty for everyone, not just those who happen to be in favor at a particular moment?
Well, there are a few ideas floating around. One involves Congress potentially stepping in more forcefully, requiring regulators, for instance, to publicly disclose any requests they make to banks that might touch on First Amendment activities.
More transparency.
Exactly. More transparency can make it much easier for individuals or groups who feel they've been wrongly targeted to challenge those actions, maybe even in court.
What else?
Another area is addressing the high barriers to entry in the financial sector itself. More competition, maybe more smaller banks, Credit unions, fintech options could give people more choices, making it harder for a few large institutions to control access.
Less concentration of power.
Right. And of course, you can't talk about alternatives without mentioning cryptocurrency.
Ah, yes, the crypto angle.
It's often brought up as a potential way around the traditional system. It can bypass banks, even governments sometimes acting as middlemen. It offers a potentially decentralized financial path.
Though it comes with its own complexities and risks, of
Oh,
course.
absolutely. It's not a simple solution, but it's part of the conversation about financial alternatives.
Okay. So, as we wrap up this deep dive, what's the ultimate takeaway here? What should people be thinking about?
I think the main takeaway is that this fight, this tension around financial liberty and free expression in our very digital age, it's far from over.
Mm.
President Trump's executive order is clearly a significant move, a real effort to protect Americans from politicized debanking. But the underlying issues, government influence, subjective standards like reputational risk, they haven't just disappeared. They still demand our vigilance, our attention.
Yeah, it really pushes us to think, doesn't it? In a world where almost every transaction leaves some kind of digital footprint, how do we genuinely safeguard our fundamental freedoms, especially when access to basic financial services can seemingly be controlled by just a few powerful entities?
Right. And how do we ensure that our financial systems remain truly neutral platforms, serving all Americans fairly, regardless of their beliefs or affiliations?
It leads to a pretty big question, I think. As information flows more freely than ever, maybe, how essential is a truly free financial flow to a healthy, thriving society? And what other steps might we still need to take to really secure that freedom for everyone?